Imagine this for a second. Your side hustle, that passion project you started at the kitchen table, is absolutely flying. Orders are flooding in, your clients think you're a genius, and for the very first time, this feels, well, it feels like a real, proper business. It's an amazing feeling, right? But with that awesome success comes a new challenge, one that might be lurking just around the corner.
And that's the big question, isn't it? Is all that brilliant growth you're seeing actually pushing you towards a major tax milestone? If you're not ready for it, trust me, it can come as a massive shock. So let's make sure you're prepared. And to guide us through what can be a pretty complex topic, we're drawing on the expertise of the team at My Tax Accountant. They've put together all this guidance to give UK solopreneurs, just like you, the clear, practical info you need to navigate the world of VAT with confidence. So let's dive right in. To make sense of all this, we're going to follow the journey of a freelance designer in London. Let's call her Chloe. Now, like a lot of you, she turned her passion into a really successful side hustle. But as her income grew, she hit a critical tipping point, the moment her business became subject to VAT rules. And this is the first and, honestly, the most important idea to get your head around. Okay, here is the magic number, the one you need to remember. For the 2025/26 tax year, the VAT registration threshold is £90,000. Now, crucially, this isn't your profit. It's your total taxable turnover. If your business's sales hit this number in a certain period, you are legally required to register for VAT. Think of this number as your North Star for staying on the right side of HMRC.
So, what on earth is taxable turnover? It's a phrase that trips a lot of people up. Basically, it's the total value of everything you sell that isn't specifically exempt from VAT. Things like postage stamps or some financial services are exempt. It includes all your normal sales, but also things sold at a reduced rate or even zero-rated items like children's clothes. The biggest takeaway here, it's based on your total sales, your total income, not what's left over after you've paid all your expenses.
And here's a pro tip, and honestly, this is the one that catches so many people out. This isn't about your turnover in the usual April to April tax year. Oh no, it's a rolling 12-month period. At the end of every single month, you need to look back at the last 12 months. Did your turnover top £90,000 in that window? For our designer Chloe, a huge project landed in May, which meant she had to check her total all the way from last June up to this May. It's this rolling calculation that can tip you over the edge when you least expect it. So, once Chloe realized she was getting close to that threshold, she had a big decision to make. Do you wait until you're legally forced to register, or do you do it voluntarily before you have to? This is a really strategic choice for your business, and there are some serious pros and cons to think about. Now let's look at the next step.
All right, let's break it down. On the plus side, once you're registered, you can claim back the VAT on your business purchases. We're talking laptops, software, even your accountant's fees. It can also make your business look bigger and more credible, especially to larger clients. But it's a real balancing act. See, for Chloe the designer, if her clients are other VAT-registered businesses, it's no big deal for them. They just claim the VAT back. In that case, registering is a great move. But if she mainly sells art prints to the general public, suddenly she has to add 20% to her prices. That could make her totally uncompetitive overnight. So you see, you have to know your customer.
After thinking hard about her clients, Chloe decided the pros won out, and she took the plunge. So this next bit is all about action, the practical steps you need to take to get official and stay compliant. And you know what? It's not as daunting as it sounds, as long as you know the process. Let's walk through it. The process itself is actually quite straightforward. The moment you cross that £90,000 rolling threshold, a 30-day clock starts ticking. You have to tell HMRC by the end of that 30-day period. The registration is all done online through the government gateway. Once that's approved, you'll get your very own VAT number. And from that day on, you must charge VAT, you must issue proper VAT invoices, and this is where keeping good digital records becomes absolutely non-negotiable. And here is another fantastic pro tip that can be a real game changer. You can actually claim back VAT on some of the things you bought for your business before you even registered. You can go back up to 4 years for goods that you still have, like that brand new laptop or office chair Chloe bought last year, and up to 6 months for services, like software subscriptions. This can mean you get a nice little VAT refund on your very first return. But, and it's a big but, you must have all the valid VAT receipts. Right, so just as Chloe is getting her head around VAT, there's another huge change on the horizon. It's called Making Tax Digital, or MTD for short, and it's going to completely change how solopreneurs report their income.
This is something every single self-employed person needs to get ready for, starting now. Now, MTD is already a reality for VAT. The next massive step is for income tax self-assessment. From April 2026, if your income from self-employment or property is over £50,000 a year, you're in. A year later, in April 2027, it'll extend to those earning over £30,000. Yep, the days of doing one big frantic tax return in January are well and truly numbered. So, what does MTD actually mean for you day to day? Well, it boils down to two key things. First, all your business records have to be kept digitally, using compatible software. Think Xero, QuickBooks, that sort of thing. And second, instead of one annual tax return, you'll have to send summary updates to HMRC every single quarter. It's a huge shift towards a more real-time way of handling tax. Now, trying to navigate all of these changes can be tricky, and getting it wrong can be really costly. In fact, Chloe almost made a very common mistake, and it could have been a serious financial hit. Stay with me, because finding out what it was could save you from the same pitfall. Okay, so HMRC has recently changed its penalty system to be a bit fairer, so it targets people who are repeatedly late. For late submissions like your quarterly MTD updates, it's now a points-based system, kind of like a driving license. You miss a deadline, you get 1 point. If you file quarterly, once you rack up 4 points, boom, you get a $200 penalty. And you'll get another $200 fine for every late one after that while you're still at the threshold. But, and this is so important, the penalty for failing to register for VAT in the first place is a completely different and much tougher system. This was Chloe's near miss. The penalties here are calculated as a percentage of the VAT you owe, and they get bigger the longer you leave it. As you can see, being just under 9 months late could cost you 5% of the VAT due, and it just goes up from there. This is exactly why tracking that rolling turnover is so important. Let's end this section on some good news, though. Those new penalty points aren't permanent. If you keep a perfect record of on-time submissions for a set period, usually 24 months if you file quarterly, and you've sent in all your old returns, your points get wiped clean. It's a system that's really designed to encourage good habits, giving you a chance to reset the clock. Okay, phew, we have covered a lot of ground. So let's do a quick fire recap of the absolute essentials. First, always watch your rolling 12-month turnover. Second, that magic number is £90,000. Third, think very carefully about whether registering voluntarily is the right move for your business. Fourth, get ready for the massive digital shift to MTD from 2026. And finally, get to know the new penalty systems so you can keep your business safe and sound. Now, it is really important for me to say that all the information we've talked about today is for general guidance only. Tax is complicated, everyone's situation is unique, and you absolutely should not rely on this alone to make financial decisions. So I'll leave you with this to think about. As your fantastic side hustle keeps on growing, what is the one single thing you can do today, right now, to make sure you are ready for the tax rules of tomorrow? And if you're not sure what that next step is, or you just need professional, tailored advice on VAT, making tax digital, or any other tax questions, you must consult an expert. You can contact the team at My Tax Accountant directly. Their details are on the screen for you now. The number is 0208 570 8531, or you can email them at info@mytaxaccountant.co.uk. Thanks so much for joining me.